Good evening. This is the Elliott Wave update for the S&P 500 and the Nasdaq 100 for Wednesday, August 31st, 2022. The market spent the better part of the sessions today working their way lower, which does continue to fit within the view number one, which is the count where I am looking at, let me just flip this out to the daily chart real quick, where I'm looking at the primary wave B being complete at the S&P high at 43.27. So with that in mind, we would be in a primary C wave decline. Within that primary C wave decline, it will consist of 5 waves, 1, 2, 3, 4, 5 is how they will be labeled, of decline. So they'll be of an intermediate degree to complete the primary degree move, and there'll be 5 waves down. So within that intermediate wave one, there are going to be 5 waves of minor degree. And so I think because of the depth and the height and actually the depth of where I think this primary C wave could take us, that I'm counting it as minor waves down to a intermediate wave one. Where can intermediate wave one come in? Well, it really should start to probably come in around 38.31, not any lower than 37.14, and that would be 1 and then 2, and then a 3 really starts to bring us down. But if we're really going to take a look at this whole thing and we pump it out to the weekly chart, we're going to see that the S&P in total, I'm looking for the entire ABC primary degree moves would bring us down towards the March of 2020 low. And that is 2,170. Now that's just an area. When we start to put fibs on under the current count, which is all the territory covered thus far, we can see that a primary C wave would be equal to wave A at 33.35. So that's going to be support zone that could possibly complete this whole move. Now, not really going to that level. I think it goes much further. Again, if that's what I'm looking for to complete the primary degree moves, then I'm expecting a third wave to be pretty seriously big. And if this is all just in minor degrees, then we'd be looking for much lower. So based on that, I'm going to go back to that daily chart and say that I haven't done it yet, but there is a possibility, and I'm saying it now because you're going to walk in and it might just be there, where I'm counting too slow and that these degrees are unfolding much quicker. So maybe algorithmically, they're just kind of clicking through and this is the way it's all going. So this could be intermediate wave one, intermediate wave two. It did do 5 waves down. Maybe these are the minor waves and this is going to be intermediate wave one out of 5 that it's going to do. And this could be intermediate wave 2 of primary wave C. So you can see we'd be in that intermediate third wave and it's building. That's why I'm counting it this way, because it could be building. Intermediate wave 2. Minor wave 1 of 3, minor wave 2 of 3, minute wave 1 of 3, et cetera, et cetera. It's subdividing as it's starting to fall. So this third wave could really start to pick up energy. And under this particular count, that's what it needs to do. It needs to pick up the energy to the downside and start breaking towards these levels and get itself back below 36.39, which is the current low. So I'd be looking for this intermediate third wave to get us down towards 33.35. And maybe put in a 4 or even go further, right? Maybe down to 3,000 and a drop. What's going to cause it? You can choose. I won't be looking for that to guide me. The market will guide us. By the way, I'm just looking over. NVIDIA's dropped another $6 after the close. So something else is coming out about NVIDIA. So NVIDIA is really taking it on the chin all of a sudden, which not a big surprise. So these are also going to see when you start to say, well, what's going to cause it? Well, here you go. I didn't know, but here's the news. Here's the story. Here's the deal. They take the market lower. So again, it will happen. Now, back here into the S&P, we're seeing it also start to go back down. Tried to keep it higher. Now they're going to continue to move it lower, but that's what it needs to do under this count. So we're going to buff it up against, if we're right at a little bit above, support at 39.48. So 39.50 down to 45, support. It's going to waffle around as if it's a point of control. And then it should continue. And 38.31 should be next up on the size on the daily chart of that count. I'm going to take this down because now I want to add some additional fibs. And right now I'm leaving this count labeled as it is so that I can get over it. But again, it might change. And now we're going to put on our next level of fibs, and those are going to be for this third wave. We haven't decided the degree yet, but it should be a third wave. So let me just get in there real quick and edit these so that we're lining things up. Our beginning point was 43.27.50, and our end point was right there. That high was 42.17. Not bad. I get close. And that midpoint was 42.10. Move it up to 11 because I think it was closer there. Okay, so now we're looking for kind of overlaps where we think this either minor third wave or intermediate third wave can come to. So when we're looking at it, we have the 100% and the 382%. Oh, that's even first. It's gone through the 100% mark where wave 3 would be equal to wave 1. We've already exceeded that. Now we're honing in on this larger move of where the primary C wave is 38% of the primary A wave. And that is just crazy little support. But what we have coming off is additional support underneath there at 39.52. Then we have 39.17, 38.66. Here's your next zone. I'm looking for where these little waves are going to come in. This is a zone where I think that whatever's going on here, too. So this is, if this is intermediate wave 2, and now we're in intermediate wave 3, minor 1, minor 2, 1, 2, 3, 4, 5, and then 4, 5. So we got some room here to start a much stronger decline. That's also what I need to include. And here are our levels. So these match up. And where can all of this kind of end in terms of an intermediate third wave? I think, again, this would be like my minor 1, minor 2 of intermediate wave 3, then minute 1, minute 2. So that's minute 1 of minor 3, of intermediate 3, et cetera, et cetera. And so we can get us into that 3 of 3 of 3 move. And then again, you haven't heard me talk about this in a while. On a 3 of 3 move, you get that extra push. They're subdividing. On a 3 of 3 of 3, that's even more of a push. So you get that burst of this, then it'll slow down and work its way out through a series of 4s and 5s. But we're getting that push, and you can see that the support spreads out. So it makes sense that it could get there quickly, because once we break here and here, that's the zone. And 3,900 would be stronger support down to that 38.66. That would be stronger support for view number 2. And I'm going to toss it in just now, although it's going to stick out because we got a lot of stuff going on in our world and everywhere else. And so we don't know. I don't know what possibly could be driving, the markets anywhere. We got better ideas of what could drive the market lower because we have a lot of economic stuff going on, less up with the Fed, interest rate, et cetera. But in terms of what would force the market to move higher, That's what would have to happen because, again, on the view number 2, this would be intermediate A, and we're dropping in an intermediate B wave that finds support in this zone and rallies. Now, what's going to be the key to that? It's going to be the exact opposite of what you would expect. Right here, we'd be looking for this to come down and break, hold, little pump, little bounce higher, and continue to move lower. It's a larger decline. It's got a purpose. It's got direction. It's got reason to break below 36.39, to break down and start getting itself to those lower levels, to just around that 3,000 level, all the way back down into here and beyond. So again, when you start to pull open the chart and you can already get below 3,000, you're like, okay, how far is it really? Well, we're starting to break down. Now, I think that also what's got this kind of going in its favor versus a rally just picking up is we got things now turning everything. Look at here. This is the 4-hour chart. So it's not even like going past the daily. Look at the 50 crowning. Look at the 200s. Now they're beginning to turn, and the SMA, excuse me, let me just open that up. Come on, don't do that. Come on. God. It's such a pain. I gotta tell you, come on. And the mouse and everything else doesn't go. But what I'm trying to discuss is see the moving averages. And it was that the 200s are kind of rolling and starting to turn. On the hourly, they're all pointing. That's for 200, that's pointing pretty hard down. The angles out here, so kind of letting you know they're probably going to last a while. 20 hard down, 50 now hard down. So I'd be looking for more here. And while I have to accept, excuse me, that it's support, there are bigger things. So it would be kind of a point where if it goes through there and it's got purpose and it's really going, then view number 2 truly takes even drops further back in the seat. We have more support that is a primary C wave down, and that does suggest much lower levels. Tomorrow, let's see how the market wants to react. We've got numbers, we've got now NVIDIA. Not sure exactly the weighting of NVIDIA. It is up there, but not as heavy as Apple. And if Apple starts to come back down, which it is a little bit, we're changing the whole picture. Now we start to see that push that we want to see. All right, so I'm going to leave the S&P there. Let's go quickly over to the Nasdaq, which obviously should have a bigger effect because of its tech nature. Now, same deal here, sits where primary wave B, we've got it marked as complete at 13,741. Off of that level, we have started a primary C wave decline. It will consist of 5 waves of intermediate degree. I cannot underestimate or overestimate that this has the possibility of being intermediate wave 1. And these then would switch to minor. So I'm just upping the degree. And it works easier here, and I'll explain right now. If this is intermediate wave 1 and intermediate wave 2, then I'm counting a third wave. This was very big last Friday. It was a kickoff, a very strong kickoff. Is it a minute wave or is it a minor wave? We're coming off in an intermediate third wave. It was a beautiful kickoff into that size of a wave. So that gives me another reason to go to intermediate wave 2, minor wave 1 here, minor wave 2 here, minute wave 1. So I'd move these down, minute wave 1, minute wave 2. And now you're beginning to see, because minute 3 should start to do the little bit of rainfall, just drop. And while we're getting these little upticks, it is kind of being now consistent for just being open for 27 minutes to find additional selling. It's going to slow down, but we'll see how that all plays into tomorrow. Again, the numbers, unemployment or jobless claims, and the ISM manufacturing are both tomorrow morning. So Add that in, we'll see what happens. But right now, yep, we still have this support all the way down to there, and this could go to view number 2, but it's really going to depend on how this all falls. I really wouldn't expect, if this is just a intermediate B wave, it shouldn't just drop. It can, but this is why I switched over to this count, because of this. Now it's time to do this again. So I've got that in mind, and that's going to give support to upping the degree rather than switching the view to a more bullish, and I'm talking real near-term bullish. Because again, remember, if it comes down here, finishes, it's got to turn and it's got to rally, and it's got to really just get itself above all these moving averages to put a complete halt to their decline, to put a complete halt to the trend being down and reverse it to being very short-term up. And all of these need to have enough power to get itself back above here. If this thing stands a chance of getting itself up to here or higher, all of that's got to turn. What's going to do it? I have no idea. But I've got to include the possibility that it can happen. Stranger things, remember? In a higher interest rate environment, we did get one raise where it was 75 basis points, and they loved it. They bought the market up 300 or 400 points. Remember, we just need to go back and take a look. That's all we need to do to say, boy, that was totally contra what we all thought. But they spun it in such a way that everybody took it and ran with it. No matter what, that sits there. Now, what do I think for tomorrow? Obviously, I am looking for this thing to pick up some steam and to cover this territory in here. Let me pull this back out to the 4 and then back down to the hourly and see if I can find some support areas for the market. Probably not, because I don't think I can go in this direction. I can't. Let me go back out to the 4 hour so I can connect us to some price points. Sorry about that. A little bit of a delay. Let's open this up. So we're looking. What I can also add, and I'm going to do that right now on the 4 hour chart, is put that in, and I'm just going to put it in for either intermediate wave 3 or minor wave 3. And we will edit this real quick. That high was 38. Nope, it was 41. So that was 41. The end point was 32.17. And the middle point was 12. Well, that was 10 or 11. 25. 25. Right? Yes. Okay. That brings it all up just a little bit. So we can see that here in the Nasdaq as in the S&P, whatever third this is, it has now exceeded the length of wave 1, which is what we would expect. So that part's already done. So, and now we're still heading down. So, excuse me. So again, what I'd really be looking for, an either a minor or an intermediate, but this third wave in power to get itself down to 11,734, 735, that's one area. Now, if I'm coming off in the larger C wave, we have support 11,563, all fits. So first, bringing it down into here, that just finishes this minute, sub-minute 3, excuse me. There's minute, there's the subs, brings just the sub. So we're going to stair step our way. Again, remember, that's what this is kind of suggesting. It gets down to here, goes up, comes down, goes up, comes down, ends up here, finishing up either an intermediate third wave or a minor third wave, and then rallies a little bit in a fourth, and then comes down and we repeat the process. Remember here as well, what I'm looking for on the outside. I am looking for this thing it will break below 11,068. Again, I'm looking for primary wave C would be equal to primary wave A at 8,041. I expect it to exceed that. And so my zones are coming into here and then down into here. But again, I'm looking for this to finish up above or at the 2020 lows, which are approximately, I believe, 62 something. So here we have 6,700. So I would be looking into this zone right here to complete the primary C wave, and then in turn, the cycle A wave. So we're still in the corrective phase and we're still moving through it. Back down to that hourly chart for tomorrow. Now that we are moving, continuing to drop lower as the market reacts to the NVIDIA news, and it affects everybody else under the sun. AMD starts to go, Microsoft is starting to go, so they're all starting to give it up a little bit. And that should pick things up. We still got Asia that's going to open, then we got Europe that's going to open and trade, and then it comes back to us. So again, I'd be looking for downside. Upside should be held to these moving averages. It continues to really adhere to that. When we get a little bit serious, more of a serious push, they give it the old college try. But now you got more information on why not to buy. All right. A little bit more bad news coming out about NVIDIA and the chips and how that's going to spread and what that's going to affect, et cetera, et cetera, et cetera. So all that's still happening. And then we still have the economic, which we'll get more information about tomorrow. And then we'll get more again on Friday as the employment situation, which is like used to be called employment and not a situation, just the employment numbers, it's like, but now it's a situation. And so we'll get those numbers for August because it'll be September 2nd. So things are progressing, I think, in line. It wasn't the easiest day to trade, but I'll tell you, it ended up being pretty successful. A nicely, at least for me, a nicely profitable day across several fronts. So, I tried to demonstrate by showing trading in a small account, which takes a different set of risk, a risk profile. And then more when I'm actually just trading on my own, just by myself, I will use a different account, which allows me a lot more risk. So all in all, a good trading day. And I'd be looking for that to continue, because remember that I personally find it to be much easier to trade a market that's moving in trend versus a market that's correcting. So we are again what I would call impulse, because impulse is nothing more than a 5-wave move. And now we're in a much larger. So in other words, it's starting with the primary C wave. It will consist of 5 waves. So we're already, so everything subsequently underneath it, in terms of waves 1, 3, and 5, will be their own 5-wave structures. So intermediate wave 1 will be a 5-wave structure. Intermediate wave 3 will be a 5-wave structure. Intermediate wave 3 will be the longest and the strongest, because it normally is. So we get to put all those rules together, which makes it a little bit easier to trade, because we're working through series of impulse versus corrective. Okay, I'm going to leave it right there and continue to use moving averages. If you're using the market profile, continue to use it. If you're using the order flow profile, continue to use it. You got points of control, value area high and low, and they do shift around, but they do speak volumes as the market starts to break in one area or another. And you can line that up with moving averages, with Elliott if you do Elliott, with Fibs if you're using Fibonacci. And Fibonacci doesn't always have to be tied to Elliott. There are different Fibonacci sequences that work quite well, and there are people out there that have drawn and produced strategy based on where you place your fibs. The market does move and ebb and flow and uses all these different fib levels. Okay, I'm going to leave it there, and our next update will be on Thursday, September 1st.